My name is Simon Thompson. I am the editor of Startup Daily. Oh, thank you already. You haven't even heard the first joke. Just keep something in reserve, all right? I'm the editor of startupdaily.net, the host of the Startup Daily Show on ausbiz.com.au. It's on 2 p.m. every Monday to Thursday. Tune in. If you can't, then watch it on catch-up on ausbiz.com.au. It's great to have you all here today for the latest instalment of our series in partnership with Microsoft, Ideas to Unicorn. It's great to see so many people in the room. I do want to start by acknowledging the traditional owners of the land on which we gather today, the Gadigal people of the Eora Nation. It always was and always will be Aboriginal land. And as someone who works down at Barangaroo, and every time I go to the Dunny, we read the Uluru Statement of the Heart. It's in there. As you wash your hands, you can read it in 4 parts. I just about know it off by heart. I hope it's done soon. I hope it becomes part of the fabric of this country, because our efforts on reconciliation need to step up, and we're getting there, but we've still got some work to do. All right, quick bit of housekeeping. If you need to go to the loos, they are just out there. It's pretty simple, really. The bar will be just there afterwards. If you need to come and go, by all means do. If you want to tweet, then you can always include Startup Daily Oz, at Startup Daily Oz, which is us, of course, Microsoft. And if you hashtag Ideas to Unicorn, that would be fabulous. Hello to everyone watching online too, from wherever you are in the country, Bunjalung country. It's a beautiful nation. I hope you're safe and dry wherever you are watching. Now, I do want to say a big thanks to our sponsor, Microsoft. And the best part is, I've been doing this job as editor of Startup Daily for about 3 years now. I think I have 3 pieces of swag. So this is actually on the podium. This is my 3rd piece of swag. I have more Alan Jones t-shirts that I bought from him over the years than swag. So if any of you found us here, do want free advertising for about 40 minutes on the Startup Daily Show on a Tuesday afternoon or a Wednesday, you're more than welcome to. Thank you to Microsoft. Of course, you'll see a little QR code coming up on the screen there. Click on that, go and have a look at the Founders Hub on what's going on. I do want to say a big thanks to Fishburners too. It's a decade now that they've been here, play such an important part of the startup community. This event space is for hire, so if you are thinking of doing something, it's a great place to be, as you can see, but also a chance to give back and support the Fishburners team. You would have seen the amazing list of companies just outside as you came in who are all members. The membership packages are great. Alan, who is the interim CEO, right down here down the front, he will be on a panel a little later, but talk to him anytime about being part of this amazing community. Thank you also to Pirello and to BDO for supporting today's event. This is our 3rd one, and we've had a really fascinating series. We've got some great talent today. I'm going to moderate a panel in a minute talking about the state of capital, where we are with some great VCs, and Andrew McFarlane from BDO. Then we're going to have a keynote speech from OmniStream. Ria's here, 5 best ways to attract and retain the best talent. That is a big issue right now. We're going to go on to looking at scaling a SaaS business. We wanted to have a SaaS focus at this point in time. So we've got Joseph, the CTO from Foresight Helmets. It's a great company, that one. I've had them on the show a couple of times. Justin from Thriday. That's been an extraordinary story. In terms of its funding, of course, because it's done a little bit of crowdfunding, a little bit of VC along the way as well. And Afonso from NetNada, another great climate tech company. We're seeing a little later on, we're going to hear from Rafe from Dovetail Studios, talking about venture building. And then at the end, it's over to you guys. You're going to talk to the people on the stage about what you want to know. We've got a Q&A session. We've been asking for questions for the last couple of days. We want you to jump in too. Unfortunately, John Winters, the CEO and co-founder of Superhero, has gone actual old school. He generally has the flu. It's not a COVID thing. It's just good old-fashioned flu. So he can't join us today. But we're really thankful to Alan James from loadin.com for joining us. Marina from Early Work is going to be there. Of course, she's a startup founder as well. And Mr. Jones, the nice one from Fishburners. Well, I'm going to nick off a little bit later because about 17 years ago, I was involved in a seed round with my wife. And he's now 17, or 18 years ago, I suppose, if I think about it. And he's getting to minimum viable product. I have put so many rounds of capital into him, but tonight's his formal. So after the last couple of years, I promised I would be there. So apologies for leaving a little early, but you will be in good hands with the rest of the team. The other people I do want to thank, of course, is the Pinstripe team. They do an amazing job around me and making events like this happen. So thanks to you guys. Now I'm going to hand over to one of the fantastic people from Microsoft who make all of this happen. Andrew Boyd, Boydie as he's known, is a man who's been around the traps. Most recently, he was at Safety Culture, putting an extra horn on the unicorn, building out their marketplace. He's now the head of digital natives and startups at Microsoft. Please put your hands together and give him a big hand. Thank you.
Thank you, Simon. Cheers, mate. All right, I'll only be a couple of minutes, but thank you all. You've all got the swag bags. I like the fact that we put it all in a bag for you to carry away with you. So I've joined Microsoft 5 weeks ago, and this is one of the reasons why, which is the events that we're putting together and the community that we build. I just want to tell you a little bit about the Microsoft for Startups program and Founders Hub. You can see that QR code up there. It's really simple to sign up for it, startups.microsoft.com. It's about a $500 million program that we've put together to support startups scaling globally everywhere around the world. That includes about 150,000 US of Azure credits for startups, but it also includes things like GitHub Enterprise, some of the other software, O365 and so on. But for me, it's also the mentoring programs and the connections that you get through that program that's so valuable to the ecosystem. I've been here for a while, and for me, it's about how do we create the Australia and New Zealand startup community to be bigger, to get better, to get more startups through, to get more talent, to attract and retain that talent in the country rather than sending it overseas. And then how do we keep growing more unicorns? So this event is just absolutely perfect for that. Want to put a huge thanks out to the team that's helped us put this together, and for all of you for coming physically in person and those online. It's really nice to be back to real events. I'll keep it short and sweet. That's it from us. Thank you very much for coming. Cheers. Over to you, Simon.
Thanks, Boydie. All right, guys, let's kick this off. Let's get into one of the things I think you all want to know about, and that is capital. So please welcome to the stage Raj Rayat, the investor from Airtree, Samadi Pelenda, who is an investor at Tidal, and Andrew McFarlane, head of mergers and acquisitions at BDO. Guys, come up to the stage. Come on down. And Robbie's got some orders too. I'm sorry it's not gin, but... All right. I'm going to start with some quick introductions. I'll kick off with you, Andrew. Tell us a little bit of your story, how you came to be in this space. And by that I mean your career, not sitting on a chair tonight.
Can everyone hear me? Yep. So Andrew McFarlane, M&A partner here in kind of BDO Sydney. For those that don't know BDO and what we're all about, so we're kind of global advisory kind of firm, 5th largest in the firm in the world. Myself, so I've been with BDO for 3.5 years, and prior to that I was with Fairfax Media, so I was GM of corporate strategy with Fairfax Media. In that role, I did kind of all the M&A across the group, also strategy, and then I sat on the board. I was nominee director on the digital venture businesses that we held minority stakes in. And then prior to that, time in London, New York, and then some time in UAE. So.
The best business you had was Allure Media, but that's another story for another time. Sammy, welcome. Great to have you here. Story.
Thank you much. I'm from Tidal. I've been there for about 7 months now, and so very exciting being in the world of startups and technology. Before that, had a short stint at Macquarie Capital, working in their investment banking division, financial institutions. So much more exciting what I'm doing now. But yeah, and before that I graduated university, so excited to be here.
Great to have you here. And Raj.
Simon, can you hear me? Is this working? Yeah, great. Hey everyone, good to meet you. I'm Raj. I'm an investment manager at Airtree, and I joined Airtree about a year and a half ago. Prior to joining Airtree, I was living and working overseas, primarily because the startup ecosystem was a lot smaller here when I decided to leave Australia. So I spent about 5.5 years helping to build a fintech business called Lendable. Spent some time in East Africa, spent some time in London, and as part of that, did a bunch of deals in sort of growth stage fintech companies, from sort of payments platforms, marketplaces, and lending businesses. And now I spend a fair bit of time focused on fintech at Airtree, but we're all sort of general investors, so broadly focused on software.
All right, let's dive straight into it. And I'm going to start with the companies that are already on this journey. So let's think seed to stage A. You're already up and running. Hopefully you've got some revenue. Hopefully the P&L sheet doesn't look too bad at this point in time. But I do want to get an idea of the state of play when it comes to companies who have had some rounds and have got to basically make sure they've got the runway. What are you saying to your portfolio companies in terms of how they should be thinking right now? Raj, I'll start with you.
Yeah, sure. So as we all know, we're in a bit of a downturn. So if you look at sort of startup funding last year in Australia, it was about sort of $10 billion invested in startups. And sort of the last few quarters of last year and first couple of quarters of this year, we were sort of, as an ecosystem, putting about $3 billion into startups. And sort of over the last quarter or two, that's sort of steeply dropped off. So we're down to about sort of $1.2 billion a quarter. So it's quite a significant sort of 60% drop off in funding overall. And that really kind of mirrors what we're seeing overseas as well. And I think if you sort of peel back that story a little bit, what you see is that a lot of that drop off has come from funding at the growth stages. So think of your sort of Series A, Series B plus sort of startups raising these sort of big, 10, 20 plus $1 million rounds. Those have sort of, we've seen really sort of slow down a lot. But I'd say at the sort of seed to Series A stage, certainly us at Airtree, we've sort of done more seed deals this year than we did last year. So there's a ton of momentum and a ton of funding still going into really strong early stage startups. And I think to answer your question directly of what's changed and how the narrative has shifted, I think the focus now is really on sort of efficient growth. I think sort of the last couple of years, for a number of reasons, one of those being that most of the Western world was in the middle of the biggest kind of monetary experiment, arguably in human history. There's just so much capital flying around. Markets were really rewarding revenue growth above everything else, but the focus has really shifted now to sort of markets are really valuing efficient growth. And what do I mean by that? It's businesses with stronger unit economics, businesses that are more efficient with capital. For every dollar of revenue, I think one metric that's really come into focus is and I hear this thrown around so much nowadays is the burn multiple. How much new revenue you're adding for every dollar of capital you spend, and so it's really a shift to more efficient growth this year in recent months.
I call that good old-fashioned business. But Sammy, tell us, what about your experience with folklore? What's going on there?
The title, but yes.
Simon.
Oh, look, all VCs look the same.
You need to be wearing the t-shirt.
Sorry, Sammy.
No, that's all right.
You don't get a title t-shirt after this.
You might get a folklore one though. But no, we're seeing very much the same thing. I mean, title's a bit of a different story, I'd say, because we invest purely at the seed and pre-seed stage. And so what Raj was saying is very much true about it not affecting us as much, I'd say. That being said, I think for all of our companies that have done rounds before, what we're saying now is that the threshold for a growth round, at least, is a lot higher than it would be. And so very much the focus is on extending runway, having sustainable unit economics. The other thing I'd say is that we have a really big focus on CAC as well. And what I mean by that is that there's a strong focus on product-led growth, which we've always had. We're very much product people, and so all of that, freemium offerings, self-serve, trying to find ways to very cheaply acquire customers. And we're hoping that kind of across the portfolio kind of mitigates some of the issues that people have around, raising funding and the difficulty with unit economics particularly.
So Title's focus is that launch phase. You send these startups out into the world. Are you getting the founders coming back to you now and sort of with different expectations to the initial ones, saying, what do I do?
Yeah, absolutely. I mean, we always kind of, it's maybe a cliche, maybe not, but we always say seed is a phase. And so Tidal's very much committed to sticking with you at the seed phase, but then also kind of growing with you as you go into that Series A, Series B. Especially in our first seed fund, we're seeing a lot of our companies kind of come back to us continually. For example, ShipIt is a great example of that. We've kind of been with them throughout that entire journey. And I guess our expertise is definitely the seed stage, but we definitely like to kind of follow them through that journey.
Andrew, you must be talking to founders all the time, giving them advice on the way forward. Has the conversation changed in 2022, and has the advice changed?
I think, yeah, certainly. I mean, obviously capital markets are a lot tighter now. Just being more thoughtful and mindful around, what the cost structures are is super important. Number of the kind of later stage kind of founders that we speak to is really around looking at that cost structure and potentially kind of restructuring kind of the teams, unfortunately. But with kind of ultimately kind of a better end outcome. I think the other thing is around just avoiding kind of down rounds as well. Is kind of a big pointer in whether it's kind of bridge financing or equivalent, or looking at other financing options is something we're kind of giving advice on. I also think from an M&A standpoint, because within the M&A team we do kind of buy, sell side and capital raising. I think making founders, and it kind of goes back to kind of a strive towards profitability. Those people that are going to kind of see out this kind of downturn, even if they keep it ticking over and don't keep pursuing kind of large growth targets, are actually going to come out the other end much stronger when they see their competition kind of falling by the wayside. And we've been having a few conversations around, clients of ours are getting approached by other startups in the same area to say, look, do you want to come together? Form, kind of merge, etc. And I think we're going to see more of that occur next year.
A little bit of consolidation. Is it a case, do you think, of batten down the hatches, just ride out this storm over, 18 months, 2 years? Whether the global recession does pan out, Australia seems to have this extraordinary ability to resist that global trend, but of course we're all building global companies, so it does impact even when you're based in Australia. Is there that sense that from a growth perspective, you just need to be able to hold your ground and then look to sort of grow when we get out of this winter and go back into a spring?
Yeah, I think that's the case. The next kind of couple of years are going to be pretty hard. But I think everybody that does come out the other end is going to be in a really, really strong position.
I think what's kind of really adding to that uncertainty at the moment, and why it's really hard to put a number on it, is if you look at the kind of macro environment, there's sort of, inflation prints like the UK today came out with 11% year-on-year inflation, which is a 40-year high. And then you've got the sort of correspondent rise in interest rates. There's no real kind of short-term, there's no real sort of like driver in the short term that you can point to say that there's some kind of positive milestone on the horizon for things to switch. And so we are in this like peak uncertainty mode in capital markets broadly at the moment. We don't know when it's going to end. I think we're sort of managing our companies to extend runway as much as possible, 18, 24 months longer. But no one really knows when this is going to end. VCs certainly aren't in the business of predicting macro.
No, we only have to look at the smartest guys and gals in the room on the RBA board to know that, how dramatically their perspective can change in less than 12 months.
And I think next year as well is a little bit uncertain around just, consumer spending as well. That's a big unknown. And I think a lot of startups, they're probably missing their forecast at the moment. And that may hurt even more next year.
Sammy, I want to start with you on this one because, and you alluded to it a little bit earlier, the early stage companies and the investments there, is this a good time to launch a new startup and seek that early stage funding?
Absolutely, yeah. And so the thing I'll say is, you might touch on this later as well, Simon, but companies or VC funds are very much still raising, and I know that at Tidal will be launching our third seed fund in the new year as well. And so I think at least for us, the focus has been really reaching out to pre-seed companies. We're seeing a lot of founders building really good products at that stage where they're kind of just starting to build their MVP and they're looking around the market to see who might be a good seed investor. And so we're seeing that there's very much still a lot of opportunity there. It's probably more so on the earlier end of town than the traditional seed stage, so kind of just starting to build a product, but definitely a lot of opportunity there. And we've kind of been doing more outbound outreach, I guess, because founders are more nervous to reach out to investors for funding at this stage, but we're definitely doing more outbound and speaking to those companies and trying to nurture those relationships so that once a market improves a little bit, we're there on the front foot.
In that context, I do want to ask the three of you, I think back 2 years and the conversation was around the valley of death. So you could get initial funding and then it got tricky and it just felt like we were starting to address that. Have we addressed it, or are we back where we were 2 years ago in terms of that access to capital in that space?
Valley of Death being like sort of post-Series A, or what are you?
Well, it can be anywhere from the seed onwards. Sometimes it can be really, really difficult for anyone here who's got to that seed stage and then gone to a Series A and gone, this isn't quite going the way the initial plan expected. There's a lot of nodding in the room. So let's talk about that space then, that seed to Series A bit.
Yeah, sure. I mean, I think somebody touched on this, but there's sort of more capital in Australian venture funds. There's more dry powder now than ever before. Airtree raised a 700 mil fund at the start of the year, for which kind of 220 mil is set aside for seed, 450 mil for growth to kind of support companies as they scale up, and 50 mil for Web3 crypto, which is a whole other conversation. But and alongside that, we've got funds like Blackbird and SquarePeg recently announced, really big funds too. So I think that all of that adds up to being sort of good news for founders. And I think the sort of the bar probably for seed and Series A has sort of gone a little bit higher in line with the market. I don't think quite as high as or I don't think things have sort of tightened up as much as the growth stage deals. But I think it's about having sort of really clear milestones when you raise that seed round or pre-seed round about what you're trying to hit in the next kind of 12, 18 months and making sure you're kind of managing investors. I think a lot of companies that get funding and struggle to get subsequent rounds as well, there's a sort of a managing up, if you will, of sort of making sure you're deeply aligned with investors around the metrics that you kind of hit, or the product traction, or the partnership traction that you want to see before the next funding round. So I wouldn't say things have changed too much, and I think the headline there is good for founders locally.
Well, I've got you, Raj. I do want to ask about that, and you mentioned it in the way you've split up the Airtree 700 million, because I think Blackbird put about $250 million into new opportunities, about $500 million into there's about 70 million in New Zealand, and the rest I think was going into portfolio companies. Is it that? Do you have a sense right now that we're circling the wagons from an investor point of view around our existing bets, and that's the focus, or is it still a strong sense of we need to find the next unicorn, the next big business at the beginning?
Yeah, sure. So I think so I suppose the way every venture fund works is when we invest, we sort of earmark an amount of money that will sort of follow on into an existing company. And venture's a funny game. It's one day Sammy and I are sort of competing for a deal, and then the next day, we're trying to sort of get each other to invest in our portfolio companies. So I think the focus for us, like we're doing more sort of pre-seed and seed deals now than we were doing sort of last year. So the momentum at that side of the business has really not changed. And certainly in the last, I would say 3 months, we've seen a real kind of uptick. I think sort of following, I think NASDAQ peaked in November, and I think from the sort of start of the year, there was a ton of uncertainty, and I think around sort of Q2, sort of activity, I think really kind of slowed down the most in the broader ecosystem. But certainly for us, the last few months, we're seeing a lot of founders coming and talking to us, and we're obviously outbounding a lot of founders at the pre-seed and seed stage. So we're pretty optimistic. I think there's we're still investing heavily. We've got a ton of dry powder to raise the fund at the start of the year, and the focus is it's a dual focus of supporting existing companies and finding new companies. So we're always, every fund is always kind of it's a balancing act between those two things. But certainly new investments is where I spend a lot of time.
Sammy, Andrew.
I think on the kind of pre-seed seeds kind of range as well, the valuations haven't been hit quite as hard as the kind of later stage. obviously, like within BDO, we do a lot of IPOs as kind of part of the corporate finance team, and that's obviously dropped off a cliff. We expect it to come back, perhaps kind of back in the next year potentially. But I think that later stage, the valuations have been kind of marked down a fair amount, but I think it's still held up relatively well in that kind of pre-seed seed. So that should kind of provide some hope to kind of founders around that stage.
Andrew, I do want to ask you, while I've got you, around the metrics. Yes, we set out probably 12 months ago with a different set of metrics to the ones that people have now. Tell us about those conversations. If you are at that, you've done the seed raise, you've got to get to A, how should you be thinking and setting your metrics so that you do keep your investors happy, you do have a chance of getting the next round across the line?
I mean, I don't think the kind of unit economics and the metrics that we're looking at kind of markedly change from, a business that's been kind of well governed, over the last couple of years. I don't think that changes. Look, I don't think, and I think it's just that open communication with kind of the current investors. And I think starting new conversations with potential investors for the next round early and taking them on the journey with you is important. We speak to some founders and they come and they say, well, we want to do a capital raise and we want it done in 6 months. We're like, well, there's a warm-up period here, guys, and taking people on the journey for it can be up to a year plus. I think is important for people to kind of get their heads around.
I'm just going to, before I get to you, Sammy, I'm going to say I remember this conversation with James a couple of months ago where last year, to get an idea of how crazy it was, you guys were doing deals in 2 to 3 days, and working round the clock in some instances. Now it's slightly more normal. But in talking to founders, what expectations should they be setting around the time it will take to do a deal? Because I know when I get them on the show, they've just nailed this raise and they're already talking about their next one. So, well, you haven't even allocated that cash to, your plans, but you're already thinking about the next one. Should that be their state of mind? Is it a case of always be raising?
Yeah, I think like if you're running a business, you have a few sets of kind of stakeholders that you need to keep happy at all times. You've got your sort of investors, which are one bucket. You've got your employees, and then you've got all your customers. And we can debate in which order they fall. I think there's arguments for each. I think you should definitely think about your customers. You should answer a phone call from your customers before your investors. But I think the best way to think about that is to kind of always be nurturing those relationships, like Andrew said. You want to, and this is certainly our ethos, and I think sort of Tidal probably shares this, is you want to speak to investors as early as possible because it takes time to sort of build these relationships. It's actually quite rare to sort of meet an investor and then sort of get investment. Very very shortly after that, we have a process we work through, and so my advice is sort of nurture these relationships and. I can give you a sort of a sense from the investor perspective. It's almost, and this is me sort of like showing you behind the curtain a little bit here, but for an investor, it's almost like a sort of a free option. You're building kind of free credibility in that relationship. If you meet an investor and you say, I'm working on this really cool thing, and over the next 3, 6, 12 months, whatever it is, I'm going to do these things. And when you go back to that investor 3, 6, 12 months, whatever it is in the future, and you've done those things, like that does a lot to build credibility and trust with an investor, and I think it's a good way to think about it. I think you always kind of want to be nurturing those relationships, and certainly for us, we like to talk to founders very early in their journey. So we say it's never too early to come and talk to us.
So we need 2 ABNs. One the government wants, and the other one is the always be nurturing. Sammy, Raj was talking a little earlier about how sometimes you're competing, sometimes you're collaborating. Tell us about that from the Tidal perspective. When you do those initial investments, are you at that stage sort of saying to founders, okay, you've got this across the line, but you need to think about your next step. Here are the VCs you should be talking to. Because the other important part of the conversation, I think, is you're not just going to an ATM, you're looking for the relationships that are the right ones for your business.
Yeah, it's a good question. I mean, I think in the initial seed stage, Tidal's preference is always to lead rounds. And because of that, it means we do 5 to 10 maybe investments a year, but they're very, very high conviction, and we're taking out the whole round, if possible, every time. That being said, when it comes to the next stage, I think our preference is almost always for that company to then find a US investor. So we like to invest in companies that are able to go global almost from day one. And so it's really about nurturing those relationships with US investors more so than domestically in Australia, I'd say.
I want to pick up on that because we have seen a fair bit of offshore capital coming into the country in the last couple of years. Talk to us about that thinking and why it is important for Australian founders.
Yeah, no. Well, I mean, like I said, I think our kind of one of the key things that we look for in every company we invest in is that it's able to go global from day one. And so Australia is obviously only so big of a market, and we really like to see that it's able to expand pretty quickly and get scale pretty quickly as well. And so, we always like to encourage our companies to do that. One of our investments, actually Black Thumb, so they're doing software for cannabis production, and so that's really a company where the Australian market doesn't really make sense for them at all, really, from the get-go. And so I'd say that there's a lot of great Australian companies, but I think really our opinion is that to get that super scale and to really become a big company, that you really need to be able to tap into the US market.
Andrew, I want to talk to you about alternative capital sources. We've got a strong VC focus here, and as we mentioned earlier, between the big three, there's $2.5 billion worth of fresh capital from investors raised this year. Tidal's about to do its next fund, and I've seen plenty of others in the past 12 months. But I'm also seeing this rise of things like crowdsourced funding. We're seeing venture debt. There's different layers, and I would like you to talk a little bit to whether VC is always the right thing for the business and how you think about capital as a startup.
Yeah, it's an interesting one because we often have people come to us saying, I want to do a capital raise because they think it's the sexy thing to do. And I could have tell them to kind of pull the brakes a little bit and say, look, let's have a conversation more broadly around funding. And to your point, it should be incorporating things like, is there working capital facilities? How are you doing R&D, getting those grants in? You got kind of revenue-based financing. I think kind of recently kind of NABs come in and partnering with Lighter Capital. So there's a number of different kind of funding options out there. The venture debt guys are always going to be very active, and it should be a broader funding conversation than just capital raising. And obviously from minimizing kind of dilution in those earlier stages is super important.
In that context too, we should point out that you guys probably look at 1,000+ deals a year. I would imagine Tidal probably goes through a similar number to make 10 in the end. So if you do the maths on that, you've got a 1% chance in some ways. So, a lot of the time your job is to say no. But I imagine some of those conversations are also saying, hey, VC is not for you guys.
Yeah, I spend a decent amount of time every week talking people out of venture funding because it's not really the right fit for every type of business. I think if you have a clear a product in your mind that I think where venture funding comes in is to sort of pour fuel on the fire and really drive sales towards a product and often product development. But I don't know. I speak to a lot of founders who I'm like, you should just bootstrap this business. Like you're generating revenue generally from day one. I think that the model where VC fits the most is when the revenue is furthest away. Like if you need to invest in product for 12 months and then sales channels for another 12 months to start getting revenue, that's where venture funding fits in. And but if you're a relatively product-like business and you've got your first few customers, you can really go a long way just bootstrapping. So it's important to reflect on and do your research on whichever investor you speak to, whether it's the venture funding or if it's sort of revenue-based finance on how they operate and how the funding model will fit with your business to figure out if it's a right fit before you have those conversations. But it's a murky world. It's hard to peer through. So we try and put a lot of open source content out there and stuff like that to try and demystify this stuff. But it can be hard for founders.
Sammy, you've got a very clear thesis in terms of Tidal. So tell us about those conversations too and just sending people down the right channel. Yeah,
I mean, I'd say Tidal is probably a little bit different in that we only do 5 to 10 investments, very heavy focus on the portfolio with every investment that we make. And so our intention, I guess, is to invest with high conviction, but also with the expectation that we'd work alongside you very, very extensively. And what that means is that every single investment we make is very material to our portfolio. So it's probably a little bit less like the traditional VC model, where sometimes you might just want to take options in a company, or you might just want to put a bit of capital in and see how things work out down the line. And so because of that, I'd say that, you know, when it comes time to exits and things like that, it's a different story with a fund like Tidal as opposed to perhaps a bigger fund. And so, you know, if, for example, a founder has the option to take a $100 million exit or a $200 million exit, for some funds that might not be a very good outcome, but I think for Tidal, where we tend to be very aligned with the founder, and that would be a good outcome for our fund as well. So slightly different story, but I definitely agree with Raj in the sense that sometimes you get companies coming to you who are very much profitable, you know, hold 90% equity in the business, and really it doesn't make sense for them to take VC funding. And that's a conversation we have very often as well. I think Georgie actually last time she did this with yourself last year, or maybe not last year, but sometime earlier this year, said the same thing, which is that she actually spends a majority of time telling people not to take venture funding.
It's for your own good. Guys.
I think some of that is
yeah,
also, the founding team and just the governance structure that some kind of management teams have around them, and they feel as though they need kind of a guiding light, and whether it's in kind of the shape of a VC or another investor, it kind of fills that kind of experience and guiding light kind of role. But I think the counterfactual is there's other people out there that can equally provide that without the capital component.
Raj, you talked a little bit earlier about lifting the curtain. I would love you both to do this. Tell us a little bit about the conversations going on in investment committee. Have they changed? Has the tone changed? I mentioned a little bit earlier that perhaps the pace has come off a little bit, which is a good thing. So there's a bit more time for due diligence. I don't think the level of due diligence has changed. It's just the pace it's being done at. But is there a shift in focus at all as you look at potential investments?
Yeah, I'd say, so I think this is where the sort of headlines can sort of lead the world astray a little bit. I'd say for us, the day-to-day hasn't really changed that much. Like, we get out of bed really excited to meet founders who are excited about building category-defining companies from A and Z, and you know, taking those businesses globally. I would say the metrics, the mold of founders, and certainly our process hasn't really changed that much. I think last year, I'd say where we are now is sort of more akin to sort of 2020, 2019 in terms of the volume of capital and the speed of deals, which is really a normal level. I think last year got a bit sort of crazy and deals were getting done incredibly fast. So I think in terms of our conversations around our investment committee, things haven't really changed that much. Like, we're long-term bullish on the ecosystem. We just raised a big fund, and you know, we're looking to deploy that over the next few years. And our sort of core thesis that you can build these great category-defining companies from A and Z hasn't really changed, and that's why certainly I came back to Australia, and others on the team as well. So I think the good news for founders is the dynamic for investors hasn't really changed that much. Certainly at the pre-seed and seed level, I think, you know, once you get to growth and pre-IPO and IPO, those conversations around those tables are very different. So yeah, I would paint a more optimistic picture for founders.
Sammy, you're nodding your head, so you're the same. That's no doubt why you're all looking forward to a new fund. But what's happening around your IC?
Yeah, no, very, very much the same. I'd say there's probably slightly more of a skew towards looking after the portfolio. And so we're finding that our founders are probably less kind of willing to take on external funding at this point in time. And so we're doing probably more follow-on rounds than we would otherwise do, but very much still looking for new opportunities, trying to build pipeline for the new fund coming up. So yeah, pretty much the same sentiment.
We've got a few minutes left, and I want to have some time for questions, so please put your thinking caps up if you've got one and throw your hand in the air. But you mentioned a little bit earlier there's 50 mil in a fund for Web3 and crypto. Of course, the big conversation of the last week has been a certain crypto exchange. And
which one?
Okay, remind me. But yes, well, I did like, I think it was Casey Newton who described him as Sam Bank Run Fraud was the new name he's given him.
That's a long way from Sam Central Bankman Fried 6 months ago.
Yeah,
So-
exactly. Yeah, one of the rules is don't end up on the AFR magazine front cover because you're doomed at that point in time. But the interesting thing about this was, of course, he pledged a lot of money as an investor back into other funds. And I'm just wondering, is there a conversation going on at the moment around what that will mean? And of course, it's not you guys, and it's certainly not Tidal, but that sense that the impact that this will have on the space, especially Web3 investment, but more broadly, you know, because I would imagine the LPs that sat alongside him in places like Sequoia are going to have to pick up some of that slack on the promise.
Yeah, so I'll start out by saying, you know, FTX and Sam Bankman-Fried, it's a live situation. We don't really know what's happened. I shy away from using the fraud word, despite, you know, all the signals suggesting that. So we don't really know what has happened yet. It certainly seems to be the case that a lot of customer funds and equity value has been incinerated over the last week. I think to the tune of sort of I think they raised $2 billion and they had $2 billion of customer funds. So perhaps as much as $4 billion, which is about as much venture funding went into, you know, Australian startups over the last like 2 quarters, to put that in context. So yeah, I mean, I think it's sort of really a historic moment in crypto. I think it's a real fall from grace, you know, someone who was seen 6 months ago as being the sort of, you know, lender of last resort and who was really kind of, you know, praised for being, you know, a savior of the industry and a real proponent for supporting, you know, these protocols and other exchanges that were failing. So it's without a doubt like a real setback for crypto. And I think the problem is that in the minds of the, you know, ordinary person on the street who's perhaps not so close to crypto, this means that crypto is more synonymous with fraud than you know it was 2 weeks ago. So it's a real hit to the industry. I'd say from an entry perspective, like we didn't have any exposure to FTX, and you know we're fortunate that's the case. Certain Australian funds did, and you know it's an incredibly difficult position for them. And I think it just sort of really underscores the need. Well, I think it underscores 2 things. Like one, it's still day one for crypto. Like if you think about, you know, humans have been making payments for several thousands of years. Bitcoin was created in 2011. Like, you know, we're sort of very early on. I think the ecosystem has really only started to snowball in the last like 4 or 5 years. So it's still really kind of day one. And what this really underscores is the need for, you know, smart regulation. I think certainly things like validating reserves at these exchanges, like it's not rocket science, but we need that. The second thing I think it really underscores is that, you know, a big part of the promise of Web3 and certainly DeFi, decentralized finance, is that you remove a lot of these kind of human elements, these you know, structural governance needs that are often exploited by people who, you know, engage in fraud. And I think this only sort of underscores a lot of the arguments that are in favor of decentralized finance, like, you know, and there are a lot of exchanges, Uniswap, SushiSwap, that sort of run on smart contracts, which kind of remove the ability for a you know, fraudulent actor to sort of engage in this sort of stuff. So I could talk about this stuff for a long time, but I think those are the 2 things we're left feeling. It's definitely a setback for the ecosystem, definitely underscores the need for regulation, and for us only makes us more bullish on DeFi. And you know, we've made sort of, you know, we raised $50 million fund at the start of the year. We've made, I think, 6 or 7 investments in the Web3 space already. And all of those businesses are sort of more in the sort of infrastructure space that we have sort of really bullish long-term views on. And so we're still actively investing, despite getting a lot of questions about FTX and, quite frankly, hurting with a lot of the rest of the community. It's a real setback.
Sammy, do you have anything to add on that? I mean, the interesting thing today was the government, which up until now had been hasten slowly, is suddenly flicking the switch to hasten mode more broadly in terms of regulation and protecting people.
Yeah, so Tidal hasn't really invested in this space yet. I think we have a pretty strong thesis around the intersection between Web 2 and Web 3. Again, haven't made any investments in that space. I think we're still digging. But yeah, it's really a shame to hear about.
Guys, over to you. Any questions? All right, shout it out.
Thanks. Can you guys just talk about the process of raising a new fund and what that looks like for both businesses?
Yeah, sure. You mean sort of venture funds, how we raise funds?
Yes.
Yeah, so this is a very sort of front of mind topic for me. So we had our sort of investor summit as Airtree last week, where we got all our investors down to Carriageworks and had a lovely day. And I think the process, quite honestly, is pretty similar to what you guys go through. Like we get diligence questions on our credibility and our track record, and our thesis and our ability to back the right founders and win investments. So the typical cadence for a venture fund is you raise every kind of 3 years. I think in the last couple of years it got compressed a little bit to 2 years. So it's much as I said that for founders, you always want to keep an open dialogue with investors and potential investors. It's kind of the same for us. We're always kind of nurturing those relationships, and and I would also say, like, we're incredibly fortunate in Australia to have this wonderful superannuation system where there's these incredibly deep pools of capital that are being deployed into venture funds, into technology, into innovation, and it's all sort of your and my money that's being invested in this stuff, and we kind of take it for granted often, I think, in Australia, but it's a very unique and unusual sort of situation. So a lot of the Australian venture funds owe a lot of their success and their ability to raise capital to this wonderful system that was came before us.
Yeah, if you are a member of Australian Super or Host Plus or a couple of them, you are actually a VC investor at this point in time, so pat yourselves on the back.
You're my boss, really.
Sammy, anything to add around the raising? I mean, is it going to be a case of you put the hat out the front and everyone throws in $100 notes as they go past?
I'm not too involved in the process actually, but I imagine that's what it's like. But yeah, I think very, very much the same way that a startup would raise funds is like constantly keeping in touch with investors. And then I think things like exits definitely boost the credibility of a VC fund, and so we've been lucky to have that at Tidal.
Can I ask, and how does fees work when you're raising funds typically? Like the different people that you're raising money from?
So I'll make a general statement that like the typical model is globally in venture is that there's a sort of management fee component and a performance fee component. So we take a bit of the profits and that goes back to the manager of the fund, but I can't really talk about specifics.
They're quite complex and it's a bit of fine print you should really have a close look at, because I have seen some interesting ones over the years. Any more questions? Oh, yep.
Hey, Raj, you talked about in the beginning how the ecosystem has changed from when you were early stage of VCs to maybe post Canva and Linktree and things. How do you compare Australian ecosystem of venture capital investing compared to US, Europe, and other places, and for others as well? Thank you.
Yeah, it's a good question. I mean, I really, so I spent many years overseas, and I moved back about a year and a half ago, really because I became sort of incredibly bullish on the ecosystem. If you look at what it takes to build a good ecosystem, you need to have a few good examples, the Atlassians, the Xeros, the Canva, and it really creates this ripple effect where investors, get good returns and want to, put those returns back into the ecosystem. You get experienced operators, spinning out, doing their own thing, supporting, incubating new companies. You get early employees who have had liquidity, sort of angel investing in these companies and really stoking the ecosystem. And those early checks, those angel investors are really kind of the lifeblood, the first bit of capital that these companies get is just so incredibly valuable. So if you look at Australia, if you look at the rate at which, and we have a chart, I don't know what it's called, if you just Google Airtree, $100 million company chart or something, it should come up. But we have this chart which kind of plots the evolution of the Australian ecosystem, and the rate at which we're producing $100 million companies, which is only one metric, but an interesting metric, is really accelerating. So we're incredibly bullish, and I'm personally incredibly bullish. I think it's sort of day one, right? Like Atlassian is only sort of so many years old, 12, 13 years old, Xero as well. So, we all get to do this every day because we believe there's many more of those to come. And hopefully some of those founders are in this room.
Yeah. I think I was looking the other day, I think we've got about 50 at 100 million plus, and we've done that in less than a decade. Have we got one question from online?
Yeah, so we have one from online.
Thanks, Danny.
For the panel. From Akshita, any comment or insight on other non-VC options, so government incentives, non-dilutive ones in Australia and New Zealand, and what are the trends and patterns around that space?
Andrew, do you want to have a grab?
I mean, there's kind of various kind of grants out there. I mean, kind of R&D is kind of the typical one that people kind of choose. I tend to find that founders that kind of go through the application process of those grants find it quite painful. So that's probably my overriding comment. Other than that, it's really just being mindful of kind of what I talked about earlier around kind of the different funding options. Nothing more over and above that.
Sammy, anything to add?
No, I think that's probably right, and I guess there are other options out there like venture debt, but not something we have experience in.
I think it does really depend on the stage of the company and the various characteristics as well, because if you've got revenue and it's kind of SaaS based, then there are revenue kind of financing options out there, but it's really dependent on the kind of the model that you've got.
Okay, Andrew, what gets you pumped booting up the computer in the morning? What's the most exciting part about the ecosystem every day?
I think in general, just the level of optimism that we've got here, and I think we touched upon it before, but the level of connectivity between Australia and the rest of the globe now. We've got a huge network, but really strong firms in the US and the UK, and we're regularly talking with those guys in those jurisdictions and comparing notes. And that's from a BDO perspective, but I think we're talking about we talked about earlier around startups getting a great name for themselves here in Australia and really jumping either to kind of Southeast Asia or UK and kind of as a kind of stepping stone to the US markets. But I think that globalization of startups here has been great to see, and it's probably only been in the last kind of 5-6 years.
Raj, coming back to Australia?
I think I'm excited to see, I spent a lot of time in startup ecosystems around the world, and like it kind of shit me that, people thought of Australia as an afterthought and they're a bit of zero, whatever, So I'm excited for sort of Aussie founders and startups to really kind of take their place on the world stage, Like a lot of people around the world are looking at Australia for investment, and Australia is the most capital efficient producer of unicorns globally, and kind of the world is taking notice of that. So I'm bullish on ANZ founders kind of taking center stage and sort of punching above their weight on the global stage. That's a pretty attractive to any investor. Sammy?
I think for me, I've heard a lot that startups that raise and kind of companies invest in, I guess, at this stage in a downturn end up being some of the best startups in history. And so I'm really excited to see what that looks like in a few years and who comes out being a winner, I guess.
Ladies and gentlemen, please put your hands together. Thank Andrew from BDO, Samity from Tidal, and Raj from Airtree. Thank you, guys. Much appreciated. All right, well, now let's get to our keynote. And of course, talent has been one of the big issues of the last year. It got expensive. There wasn't much of it around. Perhaps you've been lucky and picked up someone interesting in the recent rounds of layoffs. Maybe we'll get someone from a big US tech company. We'll see what happens. But look, the important thing is once you do grab someone is to hang on to them. So for the 5 best ways to attract and retain the best talent, please put your hands together and thank Ria Shamakant, the Human Resources Director from OmniStream. Ria, come on up. There she is. Would you like to stand up, or you're going to sit? Over to you.
Right. Hello, everyone. So I've got some prompt cards here. My name is Ria. I am the HR Director of OmniStream. We are a Series A SaaS startup. Well, our bread and butter is our algorithms. So we are more of a deep technology startup focused on algorithms, AI, and machine learning. So I'll kind of get started. I did have some slides prepared. Thank you. Sure. Oh, okay. So sorry. I think I don't know how to use this. Can someone help me? Oh, just yes. So yeah. Okay. Perfect. Yes. Sorry. Okay, yes, that's it. So first, obviously, driven by the power of purpose is something I've highlighted. I think this is extremely important, more than ever before. Speaking to candidates, I think one of the things that really sticks out for them is purpose. They really want to feel aligned to your purpose, and that's something we do really well at OmniStream. And we've seen that candidates are very inspired by what we do. So to give you a bit of background, we are a very purpose-driven company. Our technology it helps retailers create optimize planning to efficiently plan and through that reduce food waste. That's something that, as you know, climate change is a hot topic at the moment. As we speak, the United Nations is having a conference on climate change. So this is something that a lot of people are aligned on. So there obviously is a little bit of reluctancy of working for startups at the moment, especially Series A startups. However, having a strong mission and purpose is something that people are still driven by. So that's my hot tip. If that's, oh, thank you. Yeah, great. If that is something that you can really tie your organization to, do so, highlight that to your candidates, and I can promise you will see a great response from candidates and employees. Second, getting the balancing act of the candidate value proposition and employee value proposition right. I think too often I've been involved in debates with founders, hiring managers about intrinsic versus extrinsic. I truly believe that to hire and retain good talent, you need a balance of both. Intrinsic value obviously is your purpose, how the feeling of belonging, your D&I strategies. And I know oftentimes a lot of us have ticked those boxes of, yes, I'm of this background, but what happens to that data afterwards? Really having I guess strategies really focused on creating intrinsic values and extrinsic values is really important. A really good example for startups is ESOP schemes. They are fairly, I guess, easy to put together, and it has immense value, intrinsic and extrinsic. So that's something I really want to highlight. A lot of times I notice that companies lean too heavy on one side or the other, and it's great to have intrinsic value to attract candidates, but you would definitely need to start reaching into that extrinsic value to retain great talent. Number 3, candidate experience is key. So I think one of the things that we have implemented at OmniStream is actually Scrum processes in recruitment. One of the things that I notice is hiring developers. That has probably been one of the hardest role I've ever had to do, especially last year. I would talk to them one day, the next day they're gone. So I think one of the things is, and also our process internally, by the time I collect all the feedback, gather inputs, complete the technical testing, the candidate's already long gone. So one of the things I highly recommend is, if you can, align your processes to your Scrum team, where you're doing it in 2-week sprints, you're gathering feedback from everybody, and you're retrospecting your 2-week sprint. So what's the feedback been from the hiring managers? What's the feedback been from the candidates? We found that it's not only a lot more efficient, we're learning so much, and we're improving every day. So that's something I found is really valuable. And the second part to this is obviously collateral, candidate collateral. It makes a huge difference. So creating interview guides, creating culture codes, podcast links to webinars, really giving a glimpse of your people and culture to your candidates and employees is something that's highly valuable. Over to number 3, so ways of working framework. So again, I will talk about that, the whole diversity and inclusion. Obviously, being of Indian background myself and female, that is something that I'm very, very passionate about, and I like to highlight it as much as possible. As I said, I've signed up, any ads I see, they have their I guess, their D&I mission statement, or you're ticking all these boxes, but what happens when you come into the role once you're in the role? How do you sort of still embed these processes? To me, diversity and inclusion goes beyond just recruitment. One of the easiest tools to implement, and we've done this really well, and we've seen a really big uplift in employee engagement and I guess even retention, because they really feel valued, is the Deloitte Ways of Working framework. Now, I've attached two on screen. The bottom one is mine, and the top one is my peer, Sean, who's in the US. So we're a global company. We work with peers all over the world. And an interesting fact is we put everything in there. How do we prefer to work? What are the things we want you to know? Like, maybe don't ping me at 3 o'clock. I'm going and picking up my kids from school. So as simple as those things. And an interesting fact about Sean and I, we both have put in our personality traits in there. So Sean is an Enneagram type 8, and I am a type 9. And you would think that, type A and type 9 probably very similar. We're polar opposites. So Sean is the peacemaker, and I am the challenger. So what does that mean? We just know how to communicate with one another. We really make an attempt and an effort to ensure we understand each other better. And it really creates that open dialogue and that inclusivity in the workplace, which acts as a great retention tool of your best staff members. And finally, we have stay interviews. This is a concept which, a lot of companies use as a box ticking method, but honestly, it is something that works really well. And I try and encourage everyone to incorporate these in your day-to-day conversations with your employees. Just try and have them as regularly as possible. The recommendation is to try and do it once a year, but try and do them as much as you can. So stay interviews, you really ask some pointy questions to employees and ask them and create a safe environment to say this is a safe place to have this conversation, and ask them questions like, are you happy? Are you happy with the organization? Is there anything about your role you would change? Asking these questions and creating that open dialogue really will give you the answers you're looking for. There is no ambiguity. You don't really sort of have to sit and guess. One of the things I do want to mention is I think you can only do your best to retain your best talent, and you can continue to have those open conversations. But sometimes if they are inadvertently moving on, this will give you that information to then try and build some redundancies, try and train up some staff members who are equally as good or up-and-comers, honing into those succession planning metrics to try and build those redundancies. So that's it from me. These are my 5 hot tips on how to retain and keep your best talent. Thanks, everyone.
Ria, if you don't mind staying for a sec, I'm sure there might be a couple of questions in the room. Guys, or anyone online too, if you've got one as well. Oh, here's one.
I'm actually interested to know more about stay interviews, especially how do you get honest feedback from the employees,
Yeah, so I think it really is something that you have to continue doing. And one of the things I always encourage managers to say as soon as you go into the room to tell your employees, this is a safe place, and this feedback does not leave the room. Obviously, up to the candidate, if this is not employee at this stage, up to the employee if they want if they're comfortable with the manager sharing that feedback with HR or managers, but that is something that will really get value, and you'll find that they'll open up to you and have those conversations, and also build trust. That's one of the key there, is building trust, and you'll find that employees will open up to you and you'll get that information from them.
Appreciate it.
Yeah.
Hello.
Hi.
Hi. What would your recommendation be around where to find them? I have some exposure to talent acquisition, and there's a lot of great tips as to how to hire inclusively and how to onboard inclusively and all of these wonderful things. But where I find it often drops off is, but where do you find them? So do you have some innovative tactics around where do you find wonderfully diverse candidates before you even get to the onboarding and interviewing and all of that?
Yeah, well, you're kind of sitting around in a room full of amazing candidates. So I think besides LinkedIn obviously is your go-to tool as much as you can. The collateral that I was talking about, keep posting about your company, keep posting, create. Canva is a great tool to, you know, I myself have become quite the artist. I create a lot of videos and collateral to really attract candidates, and I find that that's a great way to, I have so many people just reaching out to me saying, hey, I really like that video you created, and I'm really interested about OmniStream. I'm really interested to have that conversation. So LinkedIn is still your go-to tool, but try and go to as many networking events. I'm also part of the startup community on Facebook. Yes, I still use Facebook, and I get to connect with some fantastic people and just having those conversations. Another great way is, you know, referrals. Internally, your people know like-minded great people. Having some sort of referral bonus scheme to try and attract similar people is another great way as well.
So not the Ivy 9 p.m. on a Thursday night.
Yeah.
Any more questions? All right. Thank you, team. Please put your hands together. Big thank you to Ria. Thank you, Ria. All right, well, let's get on with our next panel so we can build brilliant SaaS startups. To discuss the fundamentals of scaling a SaaS business, Matt Alford, who's the DevOps engineer and content creator, is going to join us as moderator. Matt, come on up. And then we've got Joseph Azar, CTO from Foresight Helmet Systems, amazing business. Justin Brohlman, of course, head of growth at Thriday. Justin, great to have you here. And Afonso Fermo, co-founder from NetNada. Guys, welcome. Here he is, Afonso. Good to see you, mate. Buenas tardes. All right, over to you guys. Thanks, mate.
Thanks, Simon. Cheers. Thanks, Ray. That was great as well. I think it's timely in the industry. I think, Simon, as you said, with all the especially large tech layoffs that are going on at the moment, unfortunately, and it's not just across the technical folk as well. It's across the different business units within. I think it's going to be an interesting couple of months on people moving quickly, trying to figure out who to get on board and then keep them on board. So, yeah, thanks for that. My name is Matt Orford. I work for Parallel, one of the sponsors here, and we're a cloud services provider, and our goal is to work with SaaS companies and startups to help them grow and scale. So our job is to take away the platform management of cloud platforms, really, so AWS, Azure being the big ones, and allow you guys, the SaaS companies, to actually focus on your thing, your product, your customers, what's valuable for them, rather than worrying about managing the platform. So we've got a great panel up here, and I'd like to start just with some introductions. Maybe Afonso, we'll start with you and then work our way back down the line. So if you want to tell us who you are, where you're from, how you got here.
But I was here first.
He paid me more to go first, though. Yeah.
Hello. There you go. Awesome. So I'm Afonso. I'm Portuguese. Also lived in Uruguay, so I can speak Portuguese and Spanish if needed. I'm the co-founder of NetNada. We are a SaaS company that automates the measurement of carbon footprint for businesses. So it takes us about 60 seconds to map a whole business carbon footprint. With that, we can reduce the costs of these companies and consultancies, etc., and actually deploy that capital into implementation, solutions, accreditations, etc. We are kind of a seed stage company. We have about 7 employees, and we focus on service-based businesses mainly.
I'm Justin from Thriday. Thriday is a banking and accounting platform for small businesses. Our mission is to eliminate financial admin and save people a bunch of time. The way we do that is by combining, banking, invoicing, and expense management into a single platform. And because we combine those things, we're able to automate the bookkeeping, automate the accounting, and people can lodge their BAS and tax directly from the platform. So hopefully the aim is to bring the time it takes to manage your finances on average from about 6 hours a week down to about half an hour.
Hi, I'm Joseph Azar. Sorry. I brought a prop. Let me just grab it.
It's the most beautiful thing you'll ever see. Look at that.
So this is what we do. We're Foresight. We make a the first world ECE certified smart motorcycle helmet in the world that's actually made in Australia. We're actually not a SaaS, we're a SaaS and a HaaS at the same time. So hardware as a service and a software as a service.
I was going to say, you're the only one that's been able to bring your thing with you.
Yeah.
So, yeah.
Oh, you can scan the QR code on the screen.
Yeah, so it's got an integrated camera in the front, patented LED array that serves as a heads-up display, speakers on each side with a Bluetooth headset, basically carbon fiber, very light, and it's awesome to wear while you're riding your motorcycle. I've been with Foresight for almost 5 years now, and it's awesome.
I use my push bike to come here. Do you have a bicycle version?
Yeah, you can use it. Yeah, you can definitely use it.
Fantastic, thanks guys. And there will be a few minutes of Q&A at the end, and you've got a great panel with minds up here to quiz. So make sure that you get those ready as well. So I want to start off with something that's probably pretty obvious, but for each of us and for all of us in the room, the customers are really the key to our success, or one of the most keys. If they didn't exist, a lot of us wouldn't exist, right? So when you've got that focus on, you've got your product, you've validated it, and you're starting to scale. Justin, maybe starting with you, can you just talk us through the focus that you were able to put on the customer and how you navigated that, and also how that customer feedback also helped you navigate what to do and when to do?
Yeah, sure. So, the customer is right at the heart of what we do. Without them, we're nothing, and that's the same for every business, right? And I kind of learned this back when I was at Home Loans. What we implemented was a customer listening program towards the end of my tenure there. And it was probably the most successful thing that we did there, and that was the very first thing I did when we got to Friday. So there are key points of the journey within every business. For us, it's when people use those key features. So someone sends an invoice, someone makes a payment, someone lodges their tax. And what we do is we ask them a question after they do that for the first time. We say, how easy was it to do that particular thing? And then every 30 days we follow up with the same question as long as they perform that action. And that customer listening program and that customer effort score can then be aggregated on a whole, measured and managed and improved on across the whole business. But we can also focus in on the parts of the product that aren't necessarily performing as well as other parts, right? So it's just a measurable way of sort of managing customer feedback. And I guess the real gold that you get out of that is the follow-up question saying, why did you choose that option? And people, give these verbatim responses. If it was good, they'll give you great feedback, and if it was bad, they'll give you that feedback as well. But we can then go and use that language in our marketing, follow up with those customers directly, and really make them advocates before they're leaving, reviews online and that kind of thing. And I guess to keep going with that we're always talking to our customers. I did a demo with a customer at 9 o'clock last night, and we just have a central repository for all of this feedback. We upload all of our customer interviews into Loom, where the rest of the business can look at that library, go back and see how that sort of conversation went and comment, etc. And we're just constantly learning.
Yeah, nice. I like how you've got that macro look on looking into specific components of the product, not just how was the product, overall. I think there's a lot of value in that as well. So Joseph, you were telling me before you kind of started an interesting time, and obviously have the challenges of COVID and supply chain issues and all that just kind of came through as well. So how did you go with customer engagement and keeping customers happy, and how did they help navigate this product for you after the first few prototypes?
Yeah, so I just like to comment, customers are important, right? But it's always a balancing act, because I think customers are important, but then employees are important, but then investors are important. And you have to kind of make them all happy at the same time, right? If employees are not happy, you kind of don't have a company. If customers are not happy, kind of the same thing, and investors as well. So the way we've done it is we kind of involved customers or potential customers from the get-go. So our product was developed with customers' feedback from day one. So we set up Facebook account, Facebook page that kind of grew to like 2,000 people before we even had a product. And throughout the life cycle of the product, it was always, hey guys, what do you think of this? What do you think of that? What do you think of this feature if we added? Would you guys use it? Would you like carbon fiber? Is it better to be matte or gloss? What do you think of this feature? So it was always a continuous, feedback loop, always asking what the customers think, and then implementing what the customers like. And we even had polls like, what do you guys think of auto recording on the Foresight helmet? And then we get feedback from customers saying, okay, what if we do it like this? What if we do it like that? And our product is exactly what everybody asked for. And it's continuous. So even now, even when the product is in the market, we're still asking customers, hey guys, what do you like most about this? What do you think of that feature? And they come back to us, we implement it, we release a feature, and yeah, so it's always been from day one. And it also helps because our employees are also our customers. So most of the employees that work in Foresight are motorcycle riders. So I myself do it, and it's constantly using the product day in, day out, thinking of things that we can add, trying it ourselves before we actually ship it to customers. And I think that has been an important part of the success of the product.
Excellent. And Afonso, one of the challenges that I hear about a lot when you're starting to scale and trying to scale is with customers or prospects is getting them on board with changing and challenging the status quo of what they've always done, and we've always done it this way. And I think you had a comment that inactivity is sometimes the biggest, or one of the big challenges that you've got. So I'd be interested for you to talk to that and some of the ways that you've navigated that.
Yeah, awesome. I think I'll add one thing to the matrix. It's the planet, it's the investors, the customers, the girlfriend, and the planet in the matrix. And with what we're doing, it's in that onboarding process, we're fighting against, okay, there's the equation of you spend $25,000 on a consultant to do this. Now you can spend $250, right? So a big gap. But there's also the ones who, well, why do I need this in my company? It's not sustainable yet, or how to do it. And that's also like a challenge. So for us, especially as an early stage, is trying to pinpoint the wow moment of our software as quickly as possible. And in the NetNada case is, you go into NetNada, you click a button, you connect to Zero, we extract all the information we need. In about 2 minutes, you have your results ready to go into a report, to the next steps for certification, implementation, and solutions. And that's been quite a moment that we can demonstrate even to a free user of the power that's behind the platform that you can ongoing measure and so forth. And it's been quite interesting to see the feedback. And like you've mentioned, yes, it's important that what the customer says, but also to educate the customer in that journey. It's like, this is your knowledge about sustainability today. This is what it can be in the future, and make sure that the vision of the product is aligned with something that maybe the customer doesn't know yet because he hasn't experienced that challenge or that pain point. Overall, I think it was mentioned in the kind of HR talent attraction aspect, we can lead even the sales cycle with impact, with mission alignment, but we can't forget that the pain point that we're solving is a cost pain point, is a knowledge pain point, not just saving the planet. Because today, people don't make change just for saving the planet. It needs to make dollars in cents. Yeah.
Yeah, awesome.
Yeah, I think something you touched on then, the status quo, that's important. Like, we had a press release that went out the other day, or a PR story, saying, NAB invests in Thriday to take on Zero and MYOB and the accountants, and like that wasn't our line, right? And we're not going out to specifically do that. What we are going out to do is attack the status quo. Like, these small business owners should not have to spend 6 hours a week managing their finances, right? The whole system was designed and built in favour of the accountants and like the big practices, and then they're used as channel partners to go out and force feed small businesses on this shitty old system, right? So our whole job is to make that better, and that's why we built it from the ground up with the small business owners in mind, and that's why we're so focused on that customer.
I have to change my integrations roadmap to integrate with you.
He's had a few people come up to him today already talking about the integrations, so yeah. One aspect I find interesting of the scaling of a SaaS company is that it typically starts, very early on with one, maybe two people, founder, co-founder type thing, and they're doing 400 things at any one point in time. Their marketing, their sales, the innovation, they're trying to get everything off the ground, and more. And I don't actually know this about any of your companies, but I'd be interested to hear that doesn't scale, right? Having the founder or the co-founder do, all of the customer relationships and making sure that's smooth. So at what point during the scale have you found that it either works or doesn't work to have people, come in and really focus on that? Maybe a customer success team along that lines. Joseph, go for it. You can go first this time.
I would say when you have money to hire people. It's difficult to kind of plan for it or say, okay, when we're at that stage, we'll do that. Depends on, when you're a startup, you kind of do everything. You're like HR, your sales, your marketing. And I'd just like to clarify that I'm not a founder and not a co-founder. The company was founded by Alfred and Jay. And they basically had to do everything. So Alfred was doing sales, doing marketing. Jay was doing design. They were both talking to VCs and raising capital. Basically, that's what you have, right? And then when you grow, then you have enough budget to actually hire people that do specific things. But even at our stage, we're Series A going to Series B. We still act as a startup. You can't hire somebody that does one specific thing and don't have enough workload to work all month, right? You can do that when you're Microsoft or Google, but we still operate as a startup. So basically, return on investment. How much money can you spend to hire somebody, and what can they bring to the table? And if what they bring to the table is just minute, then you can't hire them. So I myself, develop, act as a CTO, test, sometimes do sales and marketing, and that's what we do all year round, and everybody does the same. So there's no one specific person that says, oh, I'm just doing that, and once we get to that stage is probably when we're like 100 maybe or 200 people working in the company.
That's an interesting point. Sorry. Go for it.
Add something. I think to that point is, yes, the return on investment of who you are to do a specific job, but also how does it lay the foundation for what's next? So in our sustainability space, it's quite easy to say, okay, I'm going to just hire someone to do a bit of consulting on the side because people want to be handheld through the sustainability process. But if I think about the longevity of NetNada, which is getting 10,000 customers, not 50, does this set a foundation for someone who's am I going to develop in parallel the process to automate the customer success, the handholding via automations, via content, whatever, in line with this consultant doing that job as well. So I think for us, it's always hard to say, no, we don't need this person to come in and help with the consulting because we don't want to have that in the first place. We want to make sure it's scalable enough to kind of take over the market. Yeah.
So Alfonso, on that and what Joseph said before as well, I think there's another interesting point somewhere in there that, when do you actually look to hire someone to do the job and keep them on full time? Because as you said, Joseph, you can't hire someone for HR if you've only got, a couple of weeks worth of work. So you typically, part-time or look to partner with someone. So I'm sure there's no hard and fast rule, but at what point during the scaling do you look to an expert externally and go, we're going to use you until we've got enough funding, customers, scale, whatever it is, to start doing that internally ourselves?
Yeah, sorry. Yeah, I mean, for us, it was always when there's a need for it. So, like you said, so we hire people, but our hiring is potentially maybe a maximum of 3 people a year, right? So hiring somebody for specifically doing HR doesn't make sense for us, but consulting and hiring somebody outside the company to do that specific job when it's needed, that's probably best use for your money, right? But when we get to a point where we're hiring 100 or 200 people a year, then you'd think that you need HR and you need, I guess, to do everything that Ria talked about. So, but at our stage, because of the hiring quantity, and for us, it's like our team is pretty self-sufficient, right? Everybody knows what they're doing at all times. If we want to grow, it'll be for specific things. And so I think in our situation, the growth would be international. So now we're launching in Europe and US and Canada. I guess the hiring would be potentially for these countries, for like support, sales, all that stuff. But all of the R&D is still done in Sydney, and our team is probably enough to do everything, unless we grow and do different verticals or different, different products or accessories in the market.
Excellent. Justin, yep.
I think it's, for the same reason that anyone is going to use pretty much anyone's product here, right? Like when the pain is strong enough, then you need to do something about it. For us right now, I know, Michael's super hands-on with the marketing side of it because we've just launched. Obviously, I'm doing the same thing, and we're just running super hard at trying all of these different sort of channels. And we know when we nail something that works, and we no longer have the capacity to sort of manage that full time while still testing everything else, then we'll bring on a resource to manage that as a sort of a specialist rather than sort of the generalist. You know what I mean? So that's how we look at it.
I think there's also something magical in we are on the same wavelength of, when do you hit capacity in a certain area and then hire for that. But I think there's something magical on the creativity side of some people might come in and have ideas or develop new areas of the business that you didn't know you needed or had. So in marketing, you might test in 2 channels and then you hire someone to do those 2 channels, like, well, what about if we now do this as well? And that might kind of exponentiate that area of the business. So, of course, resources are limited, but there's some percentage on that new hire, if it's done correctly, that's going to develop something that didn't exist before, that you didn't know, maybe as a founder, maybe as in the roadmap, that could be a potential go-to-market or so forth.
That's a good point. Like, hopefully 1 + 1 = 3 when it comes to that, right? And another good thing about new hires, like no sacred cows. Like, it's amazing to get new ideas and fresh ways of looking at things because you kind of get, focused in and you just see the same thing sort of day in, day out.
And on that note, Justin, I mean, we've spoken about, customers being key, obviously, and investors and employees as well. Once you've gotten past the point from Ria's points of attracting them and getting them on board, what methods have you seen be successful for, keeping them on board and also inspiring innovation from within?
So just take them on the journey, treat them like they're friends. We've got a customer community, so everyone gets added to our Slack community once they become a member. We talk to them all the time, asking them for not just feedback on the product, but if we can help with their businesses. I've done reviews of other people's websites for growth, because they've helped me with user interviews and that kind of thing. We had a customer advisory board before we for the last couple of years, right before we launched. And they got shares in the business, and they've been some of our biggest advocates, so just stay in touch, become friends.
Afonso, anything to add onto that?
I like the word friends. Not really, to be honest. I think you guys covered it much.
Cool. Justin, I think you've got, Joseph, I think you've got some...
Yeah, sorry, can you repeat the question, because I got confused. Are you talking about employees or customers?
Yeah, employees, yeah.
Okay.
So,
right, okay.
I'm the one who's confused then.
Yeah, okay. Sorry. So for us, it's kind of like, I know it's fairly advertised and everybody says we're a family, and I was seeing something online where all companies say when we hire somebody they become part of the family, and then somebody said, yeah, but families don't fire you, and families don't get rid of you when you're not doing your job, and families don't stop paying you because they don't have enough money. So to us,
depends.
yeah. So to us, it's more of being transparent and just being honest, telling it like it is, every day, non-stop. If you're doing an awesome job, we tell you you're doing an awesome job. If you're doing not so good job, you're probably fired. But we'll do it honestly, and we won't tell you your family when you're not family. And I guess the reason for that is because we hire for passion mostly, because they say skill can be taught and passion can't. So we try to get people on board by seeing the passion they have when we tell them about the product, right? So it's kind of applies to customers. When you tell them about what it does and what we're trying to do, you kind of either see that sparkle or you see them not interested because they've never ridden a bike in their lives, right? And that's kind of the same approach with employees. We get them on board because they're excited about the technology, excited about what we're doing, what we're trying to achieve, and we retain them basically with all of the check marks that Rhea mentioned. ESOP, company outings, getting also the most important thing for us is getting them involved in the decision making, right? Because if you've got a buy-in from an employee, they will do everything it takes to get it done. But if they're being told what to do, then for them there's no emotional investment, right? And that's how we get them. So you see people doing whatever it takes, just to get something over the line, and to us that's like a sign that these people are here to stay.
Yeah, I love the comment on the passion and the culture fit. That's just such a massive part of it.
And I think as a founder, like early stage company, you might not have the best processes in the world. You might not have the HR department, but in that hire, pushing them over the line, I think one of the things that I found that works really well is look at my network and friends group and how are they complaining about their jobs, right? And kind of take that and it's like, oh, what's happening there and what's missing. And secondly is you might not have the best, kind of review process of performance, etc. But taking the advantage of being smaller numbers to just sit down, and we speak about family, means if you're a family, you have to ask, how are you outside work? And that small gesture once a month is enabled to maybe, be kind of over the top compared to like a traditional HR department who never ask you, how's your family back home? And especially we work a lot internationally with employees from all over the world, and in learning the nuances in culture, asking about what's happening in their country, about their holidays, etc., really goes a long way to make family happen inside the business.
Sorry, just on that, but it doesn't involve family. You're just being a decent human being, right? So you ask that about your neighbors. They're not your family. You just ask about them because you care to find out what's going on in their lives. But it's not about them being your family. It's more about you being a decent human being.
Yeah, I think with family, I guess, sense of belonging, right? And belonging involves more than just a contract. It involves like the extra human effort. And I think, yes, in the right neighborhoods, you'll ask to belong to that neighborhood. You need to know their names and to say hi. That they are progressing. I think bringing that sense of belonging into the workplace, it's important. I think sometimes people forget. It's about daily catch-ups. What's your KPIs? What's happening? What's next? But yeah, which can be super exciting, but not taking that time to ask those questions. So yeah, I agree with you.
And with that, time's getting away from us. So, Justin, to bring it back to the fundamentals of scaling a SaaS business, one thing I like to do on a panel session is ask for a quick, one fire comment from you. If you could infuse some knowledge into the brains of everyone in the room, what information would you give them on the fundamentals of scaling a SaaS business? What's the one key takeaway?
Set up a customer listening program from day one and keep it running forever.
Beautiful. Afonso?
I'm putting on the spot. I think it's just have a business in a growing industry. I think that scales really well and sets you up for success because you're following a big kind of market trend like sustainability.
Yep. And Joe?
I would say try everything, because if somebody comes in and says, "Oh, I know the one thing that could improve your business," they have no idea what they're saying, and just try everything, and then one of them will work out.
Fantastic. Thanks, gents.
Sorry, just on that, why did the VC people get more time?
That's above my pay grade.
Okay.
Fantastic. Any questions out there for these three gentlemen on the scaling of a SaaS business?
Thanks. Just one for Joe. Like at the start of the talk, you talked about how close you are to customers and asking for feedback on features and enhancements to the product. Like, what process do you go through if someone gives you feedback? How do you determine if that's something that's really going to help the business, or if it might be a distraction almost, if that makes sense?
I would say quantity. So if one person asks for a feature and everybody else does not mention it ever, it's probably not good for your business. But if 20 or 50 or 100 people ask for the same thing, then you know it's a keeper.
Any others from the audience?
Everyone just wants to try the helmet.
Yeah. Cool. With that, well, thank you very much, and round of applause for Justin, Joseph, and Afonso.
Thank you.
And with that, I believe I'm now handing it straight over to Rafe to give us a talk on venture building.
Thanks, Matt. Hi, everyone. My name's Rafe, as Matt mentioned. I'm one of the Venture Studio principals at Dovetail. And I think just for the audience benefit, it's probably worth clarifying. We're not the Dovetail that you're probably familiar with. We're not the venture-backed customer insights platform. We're the other Dovetail. But I think that's sort of fair, just given the market cap and revenue that company's been able to achieve. It's no surprises there that they're outperforming us. However, we are the product development partner for 3 US fintech unicorns. So if there is some form of sort of proxy aggregation, maybe we win out there on a technicality. I'd just like to take a moment to thank Startup Daily and Microsoft, Fishburners, for hosting us today, and to the 2 sponsors, BDO and Parallelo. I think I said that right, Matt. So when Justin asked if we wanted to take a speaking slot for this event, roughly 2 weeks ago, since then we'd actually kicked off 2 new ventures, so it's been a sort of rather busy time for us. So staying on brand with my day-to-day of building startups, this is my MVP, or minimum viable presentation. So unfortunately no slides. I do have a couple of notes here just to keep me on track. But yeah, really excited to talk to you today about what we do at Dovetail. So we're a product agency and venture studio. We also have a $10 million ESV CLP fund, which we use to invest in our startups. We provide our partners with cross-functional teams of engineers, product managers, and designers as an embedded capability in their business to really augment their team. For those who are familiar with us, we're most commonly sort of known for our work with Afterpay. We were involved very early with them. We brought their first mobile app to market and continue to look after their suite of mobile apps and in-store experience to this day. So our strength is really in designing and building digital products and experiences that people use every day. And I guess in the case of Afterpay, millions worldwide. On the venture side of the business, where I sit, we work with founders, often at the earliest stages, to co-create tech companies to help founders navigate that precarious sort of first 12 to 18 months of their life. And we're heavily involved in the day-to-day and work alongside our founders directly. I'd really challenge anyone in the Australian market who lays claim to being more of an active investor than Dovetail, at the seed stage at least. I'm really happy to be proven wrong here, but I would question A, your business model, and B, your sanity. Because it honestly sort of makes the VC jobs of writing checks rather appealing. However, that's sort of being a bit reductive, given I know they do a lot more than that. Taking startups from idea to unicorn is highly relevant for Dovetail, and I believe we're uniquely placed in that sense, as we have visibility and direct contribution at a day-to-day sort of organizational level, code-based level, sort of across that entire spectrum. So has that sort of hard work, blood, sweat and tears paid off? Well, it's still incredibly early days. But signals are pleasing. Provider Choice, which is a t-shirt venture business, was our first venture. We launched out of the studio. So for those not familiar, they're a plan management system that helps families with disabilities manage the, or sort of navigate the NDIS health system. And that business was drawn up on a whiteboard at our old office in Darlinghurst with founders Tomo and John. And one of the co-founders of Dovetail, Ash Vogelberg, effectively was their head of product for the first 18 months. Less than 4 years on, they're now sort of dominating that market, employee count over 150, and valued as of their last round over $100 million. Marmalade, which is a next generation cash flow and payment tool for small business, is another example of this. And that was originally pitched to us as the Afterpay for business. This venture launched late in 2020 and is on a phenomenal trajectory and hasn't actually had to bring in external funding yet. Which segues into what I'm keen to talk to you about today, which may be a touch controversial, although it was really pleasing to hear the comments from both Raj and Sami just about VC involvement at seed stage. So VCs have too much influence around narrative when it comes to seed stage investing, at least inadvertently. I heard a great quote from a very successful founder who also happened to bootstrap their business through the acquisition. And he said, Sandhill Road, which, if you're not familiar, is in the States where several of the sort of most established VC firms are based. So he said, Sandhill Road is home to the world's best marketing firms because they have everyone universally convinced that they need their services, which I thought was interesting. And this is like a narrative that is often reverberated back to us. We talk to hundreds of founders a year, often ones that have had previously talked to VCs and subsequently were referred to us. And there's sort of this like mindset or sort of emphasis around a dependency of needing funding to go and launch their product or gain sort of any meaningful form of traction. And it's a really powerful narrative because it creates solid inbound lead generation for VCs. You know, it's likely a founder's first port of call when they really started to synthesize their business idea and got a pitch deck together. But what I think is something that's incredibly overlooked, sort of often gets lost in translation, is that most businesses at the earliest stage simply aren't VC backable, or don't satisfy that investment criteria to proceed to a term sheet. VCs are the game of outsized returns. They only need 1 to 2 bets per fund to smash it out of the park. And if they do, the success of others is actually quite immaterial. So it's important to realize these incentives. VCs are looking for moonshots. So at the earliest stage, it then really comes down to credential of founder, size of market opportunity, and then likely narrative over performance. Because at the early stage, traction is pretty hard to actually extrapolate out. And our thesis is that this leaves a large amount of sort of what could be incredible, highly successful, scalable technology businesses as sort of vacant opportunities left on the table. And that's where I think venture studios and analogous offerings really play sort of an interesting role. I think it's also worth noting that offerings by a business that call themselves a venture studio or sometimes startup studio can sort of often vary by quite a large degree. Some players offer services like helping startups with their legal sort of accounting requirements sort of fly under this banner. For some, it's branding and a bit of UI UX. But what's really pleasing to see is there's sort of an entrance of more players in the market, sort of similar to Dovetail, which we believe is a great benefit to the ecosystem and should hopefully contribute to more businesses like Provider and Choice and Marmalade existing in the world. So who do we work with? Well, for the most part, it's founders that don't come from a deep technical background. I find the term non-technical founder quite reductive, but also haven't found an appropriate alternative term. I know StarMate uses product-led, which I think is getting closer, but often product-led gets thrown around quite a bit and is sort of highly subject to overuse. We have a hypothesis that many of tomorrow's startup success stories will be founded by people without deep technical expertise. Obviously, technology is ever evolving, but I believe there's a saturation of sorts, and that the diminished number of, or sort of percentage of viable businesses that can come from a sort of cohort of people with a deep technical background who have traditionally outperformed all other cohorts. Because technology is becoming more accessible and commoditized, and while it's table stakes in the realms of building a technology business, it's becoming less and less as a sort of unique determinant of success. Obviously, there's a huge caveat to this statement in the sense that some ideas require technical excellence above all else. But again, our purpose is to expand the definition of who can be classified as a unicorn founder. And I don't want to diminish the importance of founder excellence or sort of the importance of technical leadership in these businesses. But ultimately, that latter point is something that can be solved through offerings like venture studios, and why we're motivated to see more competition in the market. What I will add there is this: I think the importance of founder-friendly terms is really, really critical as to not adversely impact the startup's cap table, which will often, impact subsequent rounds due to excessive dilution. We've just placed a CTO into one of our newest ventures, which is poised to spin out in the coming months. I really don't believe we could have found a better person to come on and sort of lead that team technically moving forward, just given their skill set and sort of past experience that has a heavy crossover with this venture. This is someone who just frankly wouldn't entertain an offer from a day one startup. And so they were actually able to secure him with just ESOP. And when it comes to raise their Series A, they'll tick that criteria which VCs like to see of having that in-house technical talent. So will our hypothesis play out? Well, the funding environment is certainly helping, in my opinion. So if you follow the sort of latest VC happenings in the news, we're seeing Australian VCs raising their largest rounds to date, despite concerns and prevailing economic conditions and recessionary flares. Blackbird announced their $1 billion fund, SquarePeg, I think circa 750. Raj mentioned Airtrees earlier this year at 700. But what does this mean? Well, I think it means too much capital chasing too few opportunities with little sort of capability to convert these like could-be fringe opportunities into venture-backed successes. And unfortunately, it's not something that you can just simply throw money at. It's more nuanced than that, and sort of we believe also has some second-order sort of problematic effects. Abundance damages entrepreneurship. So forming habits early around ruthlessly prioritizing what actually makes a material difference on your business is critical. It's that sort of forced creativity when you're staring down the barrel of your business failing that can, sort of be a sort of pivotal moment in the success of the business overall. Given the tumultuous time and activity in the pre-IPO market, we should see comparatively more capital being deployed at the earlier stages. It's arguably never been a better time to be a founder, just given the amount of dry powder available, like Raj sort of mentioned. Also coinciding with the layoffs that we're sort of seeing in this Patagonia recession, Patagonia vest recession, which I quite like as a term. But again, to get this investment, you're typically relying on a very typical founder profile. So if you're a serial founder or someone working in a company like Atlassian, Canva, or sort of in an international context of being ex-FANG with an ambitious idea, I'd really question what the hell are you doing. You should be quitting your job right now and trying to raise a bunch of money to fund your idea. But again, if you don't fit that profile, it's going to be a lot harder at Steve's stage. That's not to say you can't stand to benefit down the line, sort of when you make it to that sort of critical Series A stage. And if you're doing well, sort of look to attract a bidding war situation. I think it's worth just remembering VCs aren't the only people that invest in early stages. Certainly the most prominent and I think accessible, but there are alternative funders if you are willing to work to find them. Angels, high net worths, family offices are all good examples here. And even sort of the recent wave of successes with crowdfunding, like Thriday, who Justin was speaking to you from, is really validating this sort of means as a source of capital. If you have experience in your particular sector as well, as in terms of the investor, this can also become your best smart money. So there's two sort of examples from our portfolio companies that come to mind. We recently built a company called AuthSignal, which is in the digital security and fraud space. Justin, the founder, was a CTO at a publicly listed buy now, pay later provider and left to pursue this idea. They had investment from one of the top VC firms that I just mentioned. It was quite a lengthy due diligence process, which interestingly translated to the smallest check of the round. This is contrasted to a half an hour coffee with someone that he cold outreached on LinkedIn, who invested on the spot, right? They had deep domain expertise in his field. And so sort of from that sort of brief interaction and sort of referencing his pitch deck, had enough confidence that the AuthSignal proposition sort of landed. Ultimately it's far too early to know if that company will be successful, but they have a commercial deal on the table 4 months since launching, which, if goes ahead, would see over 30% of New Zealanders use their product. Now, high net worths certainly don't have the same signaling effect as VCs, which can be, incredibly powerful for the purposes of hiring and subsequent raising. But again, it isn't on the table for every startup. Another venture we launched earlier this year is ChemCloud. They are a digital distributor servicing the $40 billion Australian chemical industry. and a preferred means of supply, and a way for companies who use chemical inputs to transition over to more sustainable alternatives. Again, predominantly raised from high net worths and investors with deep domain expertise. So they do a monthly investor update and sort of always include at the bottom an ask section. And they've got this amazing group of highly incentivized individuals who truly understand the nuance of that industry, who are sort of rallying around them and can, provide sort of meaningful contribution. And I think, arguably that's far more valuable given their stage to source from that group, rather than an agnostic sort of typical VC investor. So it's probably all I've got time for, so I'll leave it for there. But in summary, if you're a founder and you get passed over by VCs, look to alternative funding sources. They're out there if you're willing to look, and angels and high net worths can be huge value adds over and above their investment. If you're a VC and have an early stage founder opportunity or pre-seed investment, think about referring them to a venture studio like Dovetail. We'll work with them side by side. We'll be there in the trenches and set them up in a strong position. So come Series A, you can back up the truck and dump a whole bunch of cash into the business. And if you have a background in building successful startups and investing capital, but don't want to go all in on a single idea, I'd consider joining or starting a venture studio as a sort of means for an investment vehicle. It's great to see, more offerings serving the startup community. I think we all can agree, startups play an immense role in terms of innovation in the economy, and we'd love to see sort of more successes from Australia. Thank you. I'd just like to hand over to Brett Bloom from EVP, who's going to be running our audience Q&A. Thank you, Brett.
Hey everyone. I know we've all been sitting for about 2 hours, so I thought it would be great if you could all stand up for a second, shake your legs out, and then you can sit down again. We're going to bounce around with a few topics. So it would be great if everyone was kind of starting to think about some questions that they have for our panel. The panel is, and I'll get them to come up now, Alan James from loadin.com, Marina Wu, the co-founder of Early Work, and Alan Jones, who is the interim CEO of Fishburners. Awesome. I will very, very briefly introduce myself. So I'm Britt, as Rafe said, investment manager at EVP, and we're an early stage investment fund focusing on B2B SaaS. I'm going to pass on to Marina first. If you can introduce yourself and tell us all a little bit about what you do.
Yeah, sure thing. So hi everyone, I'm Marina. I'm one of the 3 co-founders of Early Work. You might have seen us maybe on like LinkedIn or something. So our mission is to help young people find and build meaningful careers in the startup and tech industry. So what we've done so far is done a lot of content. So our newsletters become really popular amongst like people who are just graduating uni. Then we evolved that into a community. It's almost 5,000 people now who are job seekers, hirers, founders, investors, everyone who just wants to sort of like meet new people, have really interesting conversations, really candid conversations as well. And yeah, that's what we do. Pass it on to Alan.
Thanks, Jess, and hi, Britt. Nice to meet you too. For those for whom this is the first time they've been to Fishburners, I want to thank you on behalf of Fishburners for coming along today. It's unusual for me to look out at an audience full of people here at Fishburners at this time of day without an alcoholic drink in their hands. So bear with us. I'm sure somebody has a plan to serve you a drink a little bit later on. We're famous for our Friday night pitch nights, which happen every second Friday night, and there'll be one tomorrow, and so tickets are still available for that. This whole space generally packs out, so if you're here tomorrow night, grab a drink and grab one of the seats, otherwise you'll be standing in the standing room only sections. But pitch nights just go for about an hour and a half, and tomorrow night's theme is young entrepreneurs. So that's always a guaranteed exciting time out. I'm just Fishburner's interim CEO. I've been in the role since June, and I'll be handing over to a permanent CEO later this year. Looking forward to that. And then I'll be off to pursue my VC ambitions with the awesome Emily Rich, who's here representing Microsoft for Startups today. Wave your hand, Emily. Emily and I are two or three founders at Made Ventures. We're a female-led venture fund focusing on product-led teams. And that's me. Over to you, mate.
Hi, right, this is going to get confusing. I am Alan James, not Alan Jones. So I don't know how you're going to distinguish between the pair of us. I also am at Fishburners. I've been at Fishburners for a couple of years. I get mistaken for him on Slack. I've been invited to things I shouldn't have been invited to. But I'm involved in a B2B SaaS startup, which is involved in powering music festivals and events in general. So I'm co-founder of that. My other co-founder is a guy that basically runs Splendour in the Grass, and he had a big problem with an act a long time ago with the lack of communication, basically. They were just chucked a Dropbox link and told to work it out. And that never works out well when you've got 25,000 people waiting for a show and they won't go on stage. Anyway, so 5 years later, we're running most of the major festivals in Australia. We're in the UK as well, and we'll be helping out on South by Southwest Sydney next year as well. So it's going pretty well, but I'm actually in the process of going through all of this funding round and all the things that have been talked about today. So yeah, I'm on the other end of it.
Awesome. Well, a very, exciting panel. I think we're going to start a pre-submitted question. We're going to start at the point which I think, without this, there is no startups, and that's talent. And I know we've spoken about it a bunch on different panels and different speakers. But one of the questions is, how do you go about hiring talent, especially where people are at amazing tech companies like Canva and Atlassian and other big scale-ups that we have here, and they often have a lot more resources to kind of pay squillions, as it says in the question. How do you kind of go about, whether it be finding a co-founder or hiring people into your team, and if you're not running a startup, what sort of advice do you give to the people that you come across? And Alan James, we might start with you, given you're the sort of founder in the room.
Yeah, but the problem with that is, other than Belinda, that's over there, we haven't actually really hired many people. We've been lucky that I've managed to build most of the tech myself, so that's been pretty good. We're hiring consultants generally to do the bits that we can't do ourselves. Got great graphic designer and CTO as a service. So we don't know the answer to that, but we're hoping that because we're in quite a cool industry, people will want to come and work for us. But the money's not that great in the music industry, so we're hoping if they transfer over to tech that we might actually be able to attract some good talent.
Very helpful, and I hope that definitely does play out for you. And Alan Jones, you obviously speak to a lot of startups in your role.
Yeah, and I've been a founder and co-founder many times in the past as well. And I think and talk about this topic a lot because it's one of the things that holds back the companies that are in my portfolio. So I would say, my first consideration is hire for culture first, and skill second, and experience kind of is the first thing you sacrifice. Hire for people that you hope will be able to manage 3 or 4 people doing that job in 12 to 18 months' time, and in which case they're going to be in the role for long enough to power that cog in the engine that drives the revenue that will allow you to grow at that speed. And so actual experience counts for very little. Your ability to pick up a loosely defined and poorly specified and poorly understood set of responsibilities in a business and run with it is far more important. Ultimately, what keeps somebody in a team until their ESOP is worth something is the culture fit. The startups that I've been with long enough to become fully vested have been the startups that I just lived and breathed. I just wore the brand and fell in love and bored my friends and family with, how exciting the company that I worked for was. So yeah, so hire for culture first, skills maybe second, and experience if you can get it, but don't wait for the most experienced candidate. Just hire somebody that can get in and learn, because you want this person to manage a team doing that task in 18 months' time.
I think that's 100% right, and has definitely been something that's played out across our portfolio of startups that we've invested in. And Marina, I'm hoping you can give a little bit of a different take, and maybe it speaks to the kind of experience point, but there's obviously a huge community of young, talented people who are itching to get into tech, who are often overlooked. What sort of advice do you give to them to get into the startup space?
Yeah, no, definitely. I think maybe a couple of years ago, there are a lot of people who were getting paid very well at the big tech companies, golden handcuffs, whatever. But I also don't think we should assume that they wouldn't be open to opportunity. So that's the first thing. Maybe they want to do something new. Maybe they want to have more ownership over the product. When you work in a company of thousands of people, you're working on a very small slice of it. And that's not everyone's cup of tea. To your point about experience, yeah, I think there is such a huge pool of untapped, underdeveloped talent. And these are the people who have the great attitude and just don't really have the reps in terms of they don't have the big tech experience, but they have the right attitude, they have the right culture, to Alan's point. And there are just so many people who are just really itching for someone to give them that chance. I was very lucky myself that my first job in uni in first year, so I was 17 years old, I worked in a 3-person startup, and I was the 4th intern. And honestly, that was the best learning experience for me, because they gave me a chance and I just really took it and just learned every single day. I worked actually didn't work so much. I learned so much just in my own personal time as well. And I think there are a lot of people like me out there. So I would encourage anyone who's hiring to look for maybe the uni students about to graduate, first couple of years, who are just really itching for someone to give them that opportunity.
Super helpful. I'm going to flip it onto the audience. Does anyone have any questions for the panel?
I can add more on this topic, though.
Go for it.
So, odds are you're probably hiring Gen Z, and they are mission-driven. They care much more about the purpose of the organisation than really the potentially the career opportunities or the security, because they're used to not being offered security in employment or their career. And so lean into the mission, and that means that if your idea of advertising for roles is to place an ad on LinkedIn and then Seek and then wait for the applications to roll in, then of course you're not going to be happy with the applicants that you receive, because you're not communicating about that mission in a way that's attracting the heart of the best candidates out there. So before you close around and have to find 5 or 6 people in key roles in the next 6 months, or your investor's going to be angry with you, figure out how to reach candidates through other mediums. So invest in your social channels, but not just about the new functionality of your product or the fact that you were on a panel of Fishburners the other night. Lean into where are you going with this? What's the aim? What's the world look like in 5 or 10 years time if you're successful? How does it change the world of the customers that you service or the communities that you service? And that stuff's usually hard for most of us to do. Most of us don't spend a whole lot of time writing in that sort of creative framework and thinking about that sort of way. And maybe you can do it on a panel or on a stage, but it can be really hard to sit down on a social channel like LinkedIn and think, oh, all of my peers are going to see me tossing on about how the world's going to be a better place. I'm going to agonize over this LinkedIn post and probably never finish it. And 6 weeks later, your ads will still be up on LinkedIn and Seek, and you'll still be trying to figure out, oh, can I, this has been embarrassing for me, to talk about my dreams about the business. For candidates, most of all, your dreams for the business are what absolutely matters. The ideal way to recruit people is for them to find you, is for them to approach you on your LinkedIn company page, follow your company, follow you, and reach out with a coy little tender message saying, look, I've been following your journey now for 6 months, and I'm really excited about what you're trying to do, and here's my resume, and I'm hoping if there's any opportunity to come in and do an internship with something, then I'd be really excited. So that's zero barrier to entry, hiring the best talent out there. When they find you and they've already fallen in love with your mission, then really it's just a question of, well, how do I take this person's skills and experience and find a role for them in my business?
I'll second that about the hiring for attitude, ability can be learned all the way along. And the best dev teams and design teams that I've been involved in have had an amazing culture, and you can't buy that, you can't force that. It's chemistry, and when you're interview as much for culture as you are for ability, I would say, and you'll be on the road to success there.
All very, very helpful points. I think we're going to change tack a little and oh, sorry.
Quick question here. Hi, my name is Sydney. Following on from Alan's point, I've sort of taken the mantra of always be recruiting and sometimes be hiring. So it's the same in sales, right? Always be pitching and sometimes be closing. But my question for the panel is back to the culture question. What are some good questions that you use to ask in your interview process to actually qualify for this? Because you can actually ask for skill or experience, but the culture thing, how do you get past the people being prepared and so on? And after thousands of interviews that I've done, I'm still learning. So I'd love to sort of see what you guys are using today that is a good culture question, or more of those. Thank you.
I'm happy to jump in first. So number one, I think it depends on what the culture and the values are. So obviously the questions would revolve around that. The things that I personally look for and I've tried to do when I was applying for jobs, you show something you've done outside of your work and you sort of did like intrinsically. So I'll give you an example. When I was applying for Finder, one of their values was around like doing something to the best of your ability. So that was like the idea. And the recruiter was actually really interested in the fact that I had like 2 diplomas in piano. So I had no idea they were going to ask me about this, but it showed that I had like the ability to keep doing something for many years and achieve it to a high level. So I would look for ways where people have like shown proactivity even outside of their work and see how those skills can translate onto the job. Because I think that when you look at a resume and you just look at those like professional experiences, it can sometimes paint a certain picture, but it's the things that people do outside of work that are really telling. So like the questions I often ask people, like, tell me about something where you've like gone above and beyond outside of work, or tell me about a time where you've just, really messed something up and just didn't know what to do about it, and just walk me through that process. So those are like, that's the flavor of questions I would ask. The second thing I would say is that the real insight of who this person is comes from the follow-up questions. Just keep digging into like what they were thinking, what they were feeling at the time, why they did this decision. Did they regret that decision? Did they sort of like, did they say something like, in hindsight, that wasn't such a great idea. I've learned from that and this is how I improved again. So having that deeper conversation is probably even more important than that initial question you ask. That's my take.
Giving back to the community, I think, and not just like your local community, but if you're a developer, do you go to talks? Do you run events for people just to try and like self-improve? Do you run like design? Did you do any talks at the IXDA, that kind of thing? So if you can see that people aren't all just in it for themselves and that they're looking to bring and nurture on new talent, if you can try and dig a little deeper into that and open source stuff, that's always worth looking into as well. Just seeing, are people just purely about like what can I get out of this deal, or are they just trying to make the world a bit of a better place? That's probably a good place to start for me.
The biggest risk with hiring for culture is you're a team of, so let's say you're a team of 3 white male software engineers, 25 to 30 years old. Very high chance that you're going to hire for culture a 4th. White male software engineer, 25 to 30 years old, because that person feels more comfortable in your team, you feel more comfortable with them, and then you miss out all of the benefits of diversity. And so it's very difficult to fight your own unconscious biases in that direction. And so it's necessary usually at first to set quotas on yourself for applicants that don't look like the existing team, that don't come from the same sort of background, that don't have the same sorts of interests, but then look for deeper connections, look for ways of working, look for ways that people like to be held accountable for what they do, look for the degree of creativity in the things that they do outside of the workplace. So 2 things that I like to do to help me kind of fight my own unconscious biases and find more diverse talent is first of all to interview outside of the workplace. So like bring them into the workplace for a quick whip around. I always take somebody around Fishburners because I'm proud of it. And but then take them outside. So most people are prepared to be interviewed within a workplace context, and it can be quite a different thing to sit at a cafe or just go for a walk. Steve Jobs was famous for doing walking meetings with people. And the nice thing about a walking meeting is that you're not in eye contact all the time. So the candidate can relax a bit more. They're not trying to read your facial expressions all of the time, and they can just speak a little bit more honestly about who they are, what's going on. And then the other thing that I try and practice is I try and flip the interview. I'm really genuinely interested in how curious this person is about our organization and our culture, or is it just a job that they're applying for and they hope they'll get? So by limiting the amount of time that I spend talking and trying to get them to talk, and it doesn't really matter so much what about. Like just listening is really great to learn about who somebody is.
I come from a weird background in that I'm both a developer and a designer, so I've recruited for both. And one of the things I work out fairly early on from a dev interview is whether they know what they're talking about, and you can tell that by the length of answer they give. If they give a fairly short answer to something and just be really confident with it, you'd know that they know what they're talking about, and you can dig into it. If they really try and recite what was in a book, that's when you know they've been researching hard. So once you've got an idea that they know technically what they're on about, I'm really a fan of just putting them at ease and just going, look, okay, calm down, I know you're nervous, or you're probably nervous, but let's just have a little conversation about you, and just try and get them to be as normal as possible as you can be in an interview. And I found that's worked really well for me in the past. So yeah, just try and break that down and get rid of the formality, and then you'll see the real person as much as you can. It doesn't always work. Some people are just determined to stay formal, but I'm a big fan of informality in these situations, because at the end of the day, that's what it's going to be like when you're working with them. So yeah, that's how I do things.
Just going to add one thing, just across the portfolio, one thing that we've seen work really well, and to pick up on Alan's point about removing formality, is almost bringing them into a social situation within the office. Get them to come into your Friday drinks or whatever day you do it on, and kind of see how they're interacting with the rest of the team. It's something that we do, and I would argue we're a little startup ourselves. Bring them into the lunch that you have on a Monday, and sort of just see how they're interacting with the rest of the team. And I think there is a lot of gut feel in that, right? Like, they're joining the business at the early stage for the founder. Like, they have to believe in what it is, and they also have to, fit with your gut and how you kind of see the rest of the team fitting with them. Are there any? Yes. One job, Robbie.
With all the awesome tech talent offshore, particularly engineers, what's your sentiment in hiring remotely?
I've had majority bad experience of offshoring, to be honest. It's not been great. I've had a couple of good wins, but mostly bad. I really like to be in the same room as people. I also find with developers and designers, when I've worked in big corporates, that there's nothing quite like the kind of social aspect of social engineering, going and meeting the stakeholders, getting on board with them, even going for a beer with them to understand how they tick. That really goes a long way, I think. I mean, there's always going to be the economic benefits of offshoring, but I don't personally like it. It's not really ever worked for me, because I'm much more a social person, and I don't even like being on Zooms and things like that. I'd much rather be in a physical room together, but that's just personal opinion on my part. I've seen it work super well for people, but it's just not for me.
Yeah, I think we're in a bit of a world where remote almost feels inevitable, and it's hard to be local forever. So right now my team is all based in Sydney, but we do a really good job of handling everything over Zoom as well. So I actually learned from a founder that when he was first hiring his team, the first person he hired who was not a founder was actually remote on purpose, because they really just wanted to bake in that the culture, how they communicate, all those sort of habits that a big company might struggle with. They wanted to get that started early. And I thought that was a really interesting point, because if it is inevitable, we should really get good at working remote with people overseas as well. So I don't have much to comment on tech offshore talent, but in terms of remote culture, that is actually something I think we'll take on board pretty soon as well.
Yeah, I'd echo that statement. Like, it's a superpower for a business to be remote first, and offshoring for development kind of creates as many problems as it solves. And sometimes it works, but you just don't know until you've already spent too much of the money, and then you're stuck in sunk cost fallacy where, well, I've come this far with them, and they promised this time the next sprint's going to be better, so I kind of have to persist. As an angel investor, I have a really strong bias against investing in startups with an offshore team. I have done it. Most recently, a startup called Briefed that's doing brief management for creative agencies. But that's a case of really exceptional founder with some local development, mentoring and assistance on managing the offshore team. Teams and agencies, right? So even if you outsource locally, like there's a bunch of software foundries and startup studios that, I might know a founder who's had a great experience with outsourcing to a local partner, but you might get a completely different experience because although it's the same brand, you get a different team, or the same engineering team but a different product manager running them, or they go from being at 30% utilization to 110% utilization when you start, and so you're waiting around because everybody's massively busy. So yeah, but there's never any guarantees in startups. Otherwise, it wouldn't be. We would just need capital. We wouldn't need venture capital.
And also, development is obviously what you're offshore. One of the things I found particularly difficult is, certainly from my side of things, is as a UX designer trying to do that remotely. It's super difficult facilitating workshops that you otherwise would have done in person, and you can read the room, you can work out who the people hugging the walls are, and you bring them in, and it's so hard to do that on Zoom when people turn their cameras off. I was doing some work with government and everybody just refused to turn their cameras off. You could hear people walking down the local coffee shop. It was just, it was like pulling teeth. And it's the one time I feel like I truly failed as a UX designer to be able to, or as a facilitator, to be able to bring these people on board, because there was just no way of getting buy-in from them. So don't ever do, unless you, listen, I'm missing something completely obvious, don't try and do UX design facilitation ideation online, because it's just hard.
Awesome. I know we're running quite tight on time, so I think we're going to do one more question, and I'm happy for it to be from the audience, or I'm happy to sort of take it. Does anyone have any burning questions?
What are the biggest red flags when hiring?
I worked with a CTO once who met his wife playing Warcraft. Strangely, that relationship blew up. She was an elf, he was a human warlock. It was never going to work, and it really impacted on his productivity. They would go and do dungeon grinds from 1 a.m. to 5 a.m. He'd get 2 hours sleep and try and be productive during the course of the next day. That was never going to work. So patterns of addictive behavior in the workplace or out, too many cups of coffee, somebody who's incredibly productive for a couple of hours and then it just disappears for a period of time. And somebody who has difficulty explaining what they're working on and trusting you enough as their manager to really take you through what's in their Kanban and explain not just what's going on, but what they're not certain of. So somebody that would rather hide everything and then show you a result, hopefully, is a real problem. Somebody that wants to collaborate with you and say, I'm not sure about this. What do you think? And I can say I don't really know either, but at least then I know that the two of us are on the same page, and we can be a bit fuzzy about the delivery date.
Yeah, communication. Going through that as we speak with something that I'm dealing with. If they don't communicate, you go, do you understand what we're doing here? And the person goes, yes, yeah, I totally understand what's going on here. And then you come back the next day and they don't understand. It's like, well, I did ask you, and I've asked you 3 times now and you still don't quite get what we're we're trying to do here. So yeah, I think communication is the big one for me. If you can't actually say I don't understand, then it's not good.
The first thing that came into my head was just asshole factor. I think everyone has a bit of a radar, but upon digging deeper, I think the thing that really is a big red flag for me is just arrogance. You're working in a startup or just small company. You never know what the answers are. You as a founder might not know what happens in the next 6 months. If someone comes to you and gives you all the answers or some magic pill to get you to I don't know, cash flow positive, that's always a red flag for me, because they think they know so much and there's just overconfidence, and they haven't really thought about all the intricacies of a business. And then that usually comes through in their communication style as well, to the previous point. They're usually a bit of a jerk. So that's my red flag.
I'm going to add one more red flag. I think it's oftentimes when you start out, it sounds like the person really knows your business, and you start asking a couple more questions, and it's really clear they've read the website and kind of done a little bit of digging, but they're not there for your business. They're there because they want to get into tech, or they're interested in startups, but they don't actually kind of care where they go. They're happy to just get into startups, which can be fine. But I think at the early stage, when you're hiring for, the people that are helping to build the business, it's really important that the people are, they're there working towards the same thing. When you're in the sort of war room and you're kind of thrashing out an idea, and I think that that is a really important thing at the early stage. When you're a bigger business, it doesn't matter. They're joining as a job, right? They're not joining for you, and they're not necessarily joining because they absolutely believe in the business. But I think at the early stage, it's a red flag for me. Okay, we have run over time, as has all of the sessions today, so sorry. But I'm going to pass on to AJ from Pinstripe Media, who's going to kind of close it off. And thank you so much to the panel for all your talent insight.
All right, thank you, panel, and also thank you, Britt, from EVP, for stepping in to moderate the session beautifully. My name's AJ, part of the Startup Daily team. Just here to congratulate you all for sticking it out. You've sat here for 2 hours. You've earned a drink. You've earned a mountain of food that's back there. Thank you again to Microsoft for Startups. Check out Founders Hub. Thank you to BDO, the best people in finance. Thank you to Parallo, the best builders of SaaS. So talk to all these people. Thanks, Alan and Alan. Beautiful. Great to have you along. That's it. Congratulations for making it through. Drinks and food up the back. Enjoy.